The Hedgeless Horseman here. It's February the 17th, 2023. Title of this video will be It's All Relative. And I'll show you what I mean soon. First of all, look at the markets. Broader stock market is down a bit, I guess. Nasdaq almost down 1%. Dollar was up a lot, but has in the last hour, I guess since around the open, has retraced. Commodities overall are down, and it's like, this is again what I'm talking about. Like I said last video, if I had to guess where metal prices are going to go tomorrow, if they're up today, I would guess down. If they're down today, I would guess up tomorrow. But everybody, and you see this all the time, everybody reads in stuff as soon as, you know, a short-term direction is I shouldn't say clear, but it's like, yeah, people don't want to buy it today because they think it's going to go down tomorrow. And if we're green tomorrow, people are more likely to buy because they think that's the start of an uptrend, and they're gonna and the metal's gonna be up the next day. You would have much better results if you just limited your buying to down days. Simple as that. Let's say 50% or whatever, or 60% of days, you know, metals are down, and you just buy on down days. That would serve you a lot better than to, like everyone else, try to guess where metals or anything is gonna go tomorrow, pretty much. Anyway, it's like, I mean, I saw this meme, kinda. I mean, it's quite true. On Twitter yesterday. I mean, I literally think this sums up how people invest. They don't want to buy on the way down because it can always go lower, and they believe it will go lower. That's why they don't buy and are more likely to sell. At some point, whatever sector gets just obnoxiously cheap, there's no sooner or later there's no one left to sell, meaning that there's no holder who's willing to sell their ownership at a lower level than this. So there's no way for price to go down anymore, but they're willing to sell at a higher price. So there's only one way for the price to go in that case, and that's up, because nobody is willing to sell their shares at a lower price. All of a sudden, you know, the balloon has been pushed too far below below water. It starts to go up, and all of a sudden, quote, this sector works, or whatever sector works, and everybody wants to buy, because now they're comfortable with this fact that, hey, now we see an uptrend. That's literally how people work, and most of you probably have done this as well, and I have been guilty of this as well. And I have to fight it every day. If you're a value investor, the only thing, you don't care about the direction of metals. You don't care about the trend of the stock price, really. You don't care about any other 1,000 things other people care about, like Fed rates, inflation, let's say, I mean, warrant overhang or whatever. It's like you're just down to one thing. I mean, that's at least the basic thing you should get right before you start doing anything else. The cheaper it gets, more you buy, because sooner or later every sector is going to turn up, and after every sector has turned up, sooner or later it's going to turn down, and we're going to repeat this thing. But most people, again, they buy up here when a sector works. The people that actually make a lot of money, they're the ones who bought all the way down here. And all of a sudden they might have a big position, barely take any risk, because it's so cheap that they know it's not a matter of if I'm going to make money, it's a matter of when. Up here it's much more a question of if you're going to make money, and more of a question, you know, when you're going to lose money if you just keep holding it. Because let's say it's overvalued here, was very undervalued here. Here the risks are to the upside, sooner or later it's going to go up. Here risks are to the downside, sooner or later they go down. But this is the kind of stuff that people want to buy. Latest example, lithium space. As soon as somebody, someone see a company that has staked some lithium ground, it goes up straight away. Or has typically. I've seen some companies go up 200% from adding lithium ground. I'm not saying the ground they added is worthless or anything like that. It's just a tell of how sentiment is. People are much more inclined to buy lithium miners, for example, now than any other metal, I would say, or mineral. These are lithium carbonate prices in China. You can see, I mean, this is a pretty impressive run. It was at 4,000, or what is this, 46,000, or even lower than that, 39,000, what's the Chinese currency called, renminbi, back in 2020. So that's just about 2 years ago, and went up to almost 600,000. That's more than a tenfold increase. That is incredible. It's down, I don't know, 25% or something from the top. Still, lithium prices are very high. No one is disputing that. Lithium miners are printing cash right now. Times are very good. Times are very good in the lithium space. But the question is, what is going to happen in the future? There's a reason why everyone is out looking for lithium right now. It's because it's quite easy to find, and it's worth a lot right now. So, from a longer term perspective, I'm not that bullish on lithium prices. First of all, there's sodium that could be a substitute. And again, it's like everybody's trying to get lithium online right now. You see lithium deals all over the place. And who knows, maybe lithium prices will stay this high for a long time. Maybe they'll go even higher. I have no idea. I just think from a long-term perspective, since there's no shortage of lithium in the world really, I wouldn't bet on margins. I mean, typically any commodity sector, I mean, when prices go up, everybody goes out there, find more of this stuff, puts it into production sooner or later, and then you have prices crash. We saw that in tin prices recently, went up like a rocket. Let's see here, tin, where's tin? Tin futures. Went straight up. %269%. It's not tenfold, but it's quite a rally. And then went down 64%. And here it went exponential as well, kinda topped out, and then there was a, what was this, 2011, 5-year bear market after that. Went down 60%. Here we have the uranium sector, and everybody is hoping for this to happen again. Who knows, maybe it will. But this was in 2007. It went from, let's say, $7 per pound to 140, 20-fold increase, even higher than the lithium rally. Yeah, I think so. Yeah, pretty much higher than lithium rally. What happened since then? It's down still after rallying from 2007. It's still more than 50% below the 2007 peak. That's 16 years. And it's still lower. And you kind of saw the same in silver. I mean, 1980 peak, took what 30 years to get back to that high, and now we're still off that high again. I don't like chasing stuff that's gone vertical, that's up 10-fold, 20-fold. Because sooner or later that's gonna top, because this brought in a bunch of supply from Indonesia by artisanal miners, etc. And you can see what happened after that. So as prices go up, production increases, and sooner or later it's going to swamp demand, and people don't just turn off mines, etc. I mean, it's easier to just stop diving for tin, obviously, than shutting off a mine. So I guess it's a bit more elastic tin supply than perhaps some mines, but it's like the point stands. It's like when you see rises like this, it's like, believe me, everybody's out there. You can see that everybody's scrambling to find lithium. And who knows, maybe prices will stay up for quite a while, but it's like, yes, especially since lithium isn't even rare. It's like on a longer term basis, and we know, yes, it takes a lot of time to bring a mine online, etc., etc. But sooner or later, since there's no real shortage of lithium around, now the Chinese are getting into Bolivia, yada yada. So I'm just, from a long-term perspective, I would think that the lithium sector is going to have some absolutely disastrous years sooner or later. Like it went here from 170, down to 39 or 36 or whatever it was, 39,000. That's going to probably happen again. And as a value investor, I don't doubt that there's still, cheap lithium juniors out there. It's like Sigma Lithium. I think they have incredible cash flow, and they're ramping up, which could obviously produce even more cash flow. I'm not doubting that they are cheap. So at face value, again, I'm not in the habit of trying to predict really where metal prices are going. If it's cheap right now, since we don't know how the future is, that is still a cheap company, because prices might stay up here for lithium, or they might go higher. But it's all relative, which is the title of this video. So here we have Global X Lithium Battery Tech ETF. Obviously that's not near a low of any sort. Top here, lower even, bottomed here, bottom here. So one could say, okay, this is, let's say, a range at least. It's broken out, and now everybody's out there investing in lithium juniors because they work. If you have positive news coming from a lithium junior, it goes up. Even if you have no news in a lithium junior, it goes up. You get paid for the risk you're taking in the lithium space right now. As a holder, it's much more comfortable to be in a lithium junior, and if they have good news, the stock goes up. You get rewarded. In the gold, silver, and copper space, etc., it's pretty much the opposite. If you don't have great news, you'll probably not get a reward. If you have bad news, just look at Red Pine. I think it was yesterday. I think that was down 35%. They put out, 10 holes or something. 2 were good, and like 8 were below, low grade hits. I think that went down 35%. So the question is, okay, if you hit low grades in 8 holes, and 2 holes were good, still, does the value of their entire project go down 35% because you missed in 6 or 8 holes or something? It's a load gold system. They are, nuggeted to begin with. You wouldn't expect more than, 40% hit rate perhaps. That is, to me, is just incredible. But it shows what I mean. It's like you get immediately punished if you have bad news. But the thing is, obviously, that bad news should always be related to the price you're paying. I mean, if something is worth 150 million, let's say, it's trading at 75 million. Let's say some bad news came out, so the value went from 150 to 125. At face value, that's still cheap, because value went from 150 to 125, and the stock was trading at 75 million. And let's say it dropped to 50 million. Should it have dropped at all? Just because value went from 150 to 125. Because, okay, it was still undervalued. If it should be at 125, it shouldn't go down from 75 to 50. But that's how the market functions. It's all relative. In the short term, it's like if it's good news, it's gonna go up. Especially if it's in a hot sector, it's gonna go up, regardless if it's already overvalued. It's gonna go up. If it's in a bad sentiment environment, it's gonna go down even though it's cheap. So for a holder, it's two different things. Anyway, so here we have this ETF. Who knows? Maybe this is some kind of bull flag or something, and battery metals, lithium, etc. It's going to go even higher. I sure don't know. But again, my job is not try to guess where price is going to go in the short term, whatever. I just look at value. What am I paying? What's the value I get? And as we can see, I mean, contrary to lithium battery ETF, where's the GDXJ? So this is the GDXJ. Let's have that in logarithmic. I wouldn't call this at a high. If we just have this as a trend, this would be a high. And it's like these would be lows. So yes, we're off the lows a bit. No, but no, we're nowhere near a move like this, for example. And in the junior space, I think this is a bit more reliable, let's say. As it pertains to sentiment, we're barely off the lows. And as again we've seen in like Red Pine, etc., we're still in the you need great news to even be rewarded in the moment. But the thing is, like always, who made the most money in lithium? It's not the ones that bought here or even here waited for a breakout. It was the ones who bought down here, bought down here, bought down here. So let's say you bought the breakouts, like, yeah, you're up 35%. If you bought down here, you're up 200. I mean, multiples. That is the whole point. And that is why I find this so funny. The people who made most amount of money weren't the ones that got out when the sector started to work. No, they were the ones who stole value all the way down. Because they know that, no sector goes down forever. And no sector goes up forever. And you don't even... If you just focus on, valuation, price to value, you'll get increasingly bullish. Let's say this ETF here, let's say the value was up here. The gap would just be widening as this got cheaper and cheaper and cheaper. And then you wait 1.5 years, you get rewarded. That's how you make the big money. Buy as cheap as possible, wait for the sector to be more fairly priced. You don't know when that's going to happen, but you know that it is going to happen. And I just made this slide to show this. Let's say we have value here for the average lithium miner, junior. Maybe price right now is here. So yes, it's not maybe overvalued. It's actually cheap. Maybe there's a 25% price to value gap. And if they put out some good news and value goes up, it gets rewarded, so price jumps from here to up here, and it's still, let's say, 25% cheap. In the gold, silver, and copper space, it's more like this. Much higher price to value gap. If they put out good news, value goes up, price is barely changed. So the price to value gap goes up. Because price stays the same, value goes up. Because it's not getting rewarded. Nobody is willing to reprice the stock. There's no one buying. No one buying. So nobody can say that this sector is rational or whatever. I mean, what we're seeing in in relative terms between the lithium space and a lot of other metal sectors, that's the exact reason why you can make a lot of money in the resource space. Because they go from absolutely atrociously cheap to expensive or maybe even overvalued. Atrociously cheap, overvalued. Atrociously cheap, overvalued. Which sector where do you think the risks are? Are the risks to the upside in the lithium space versus gold, silver, and copper space? I would believe that within 3 years, let's say, I think there's a higher risk of the gold, silver, and copper juniors being more highly valued than lithium juniors, if I had to guess. And on long-term perspective, I think lithium is kind of, I shouldn't say toast, but it's obviously gonna, like every commodity sector, it's gonna lead to overproduction if prices stay high, and sooner or later the supply is simply gonna swamp the demand, and we'll probably have crashes like this. And we've seen that in, like, again, uranium space, perfect example. 16-year bear market, or at least until 2017. Lithium topped here in 2017, bottom in 2020, 3-year bear market. And who knows what's going to happen here. And we saw in, well, now I don't have the chart anymore, but we saw in tin, we saw that in gold. Miners topped in 2011, long-term bear market. I want to buy the sector that is cheap. And it's like, just think about it. It's okay, all is relative. Patriot Battery Metals recently hit 17.69. So maybe that was a valuation of 1.5 billion. I don't know if they have a resource out yet. I think so, maybe. But let's say they have an inferred resource. One could assume, okay, they have this much, etc. 1.5 billion recently. That is, take Magna Mining for example. Magna is currently trading at 187 million, and it has over 8 million ounces of AU equivalent across 2 pretty much permitted projects in Sudbury, Canada. I think Patriot Battery Metals have portion of its project, under a lake or something. So Magna Mining is like, I don't know, 10 years or 5 to 10 years ahead in terms of, project being advanced. Still, okay, let's say 187 million, and it was around 187 million just, a few days ago. So that would be, let's take 1,500 divided by 187, 8 times higher value. So the question is, would you rather own 8 Magna Minings or 1 Patriot Battery Metals? So again, it's like, okay, 8 times, that means, okay, Magna has I think it closer to something like maybe 10 million ounces of gold. I think it's above AU equivalent, of course, but still, let's stick with 8. 8 times 8, 64 million ounces of good grade to high grade gold equivalent across, which would be then Okay, we have 2 projects, so 8 times 16 projects. I mean, let's say we have 8 Green Hills with exploration potential and 8 Shakespeares with exploration potential for the same price that you could buy 1 Patriot Battery Metals. I don't know about you, but I would much rather own 64 million ounce equivalent in a much rarer metal, which is like nickel, copper, etc., than 1 Patriot Battery Metals. I don't doubt Patriot Battery Metals is good, but again, it's all relative. Where do your money get most bang for the buck? If you had to choose, you have $1.5 billion. You can either buy 8 Magna Minings with 64 million ounces AU equivalent in one of, which includes one of the, let's say, rarest deposit types on Earth, or a big lithium deposit. That is why I'm not touching Patriot Battery Metals. I'm not saying Patriot Battery Metals is expensive. I'm saying there's stuff out there that is so much cheaper. And couple that with like Lithium having done a 10x. Again, this is just me. There's obviously smart people that are long Patriot Battery Metals and have been and made a lot of money. But I don't care about the past. I missed the boat. All we can do is make the most rational decisions right now. And then we have like Brunswick exploration. They have a lot of land. They have a lot of potential for lithium. I don't think they have personally put in a single drill hole yet. $150 million without a single drill hole. There's some historic drilling, I think. And odds are they're gonna find a deposit or two. But 150 million? I mean, they want to redo obviously what Patriot Battery Metals has done, but I don't think Patriot Battery Metals is cheap. So they're pricing in something that's not really too cheap. And it has this valuation because sentiment is much better in the lithium space. So this, I would say, has a, let's say, a speculative premium or relative premium. Again, I'm not saying Patriot Battery Metals is overvalued, but I think it's overvalued relative other stuff. And Brunswick is obviously, I mean, one of the hopes is that it will find something similar. But 150 million. Oh yeah, and for example, it's like, would you rather own 1 Patriot Battery Metals or $6.25 Eloro resources, which I think is going to table a resource soon, which is going to be well above 1 billion ounces AG equivalent. So let's say they table 1 billion ounces. It's quite easy. 6.25 billion ounces AG equivalent or 1 Patriot Battery Metals. 6.25 of one of the largest polymetallic systems that's been discovered in the last several years, or 1 Patriot Battery Metals. I would rather own 6.25 billion ounces of AG equivalent than 1 Patriot Battery Metals. I think I get more for my money buying. I mean, this would last, I don't know, 100 years. And again, it's like Brunswick, we have Inflection Resources, which is kinda doing a similar thing. They have I thought they had all the here's all the targets. This is an absolutely enormous land package. Maybe it's even larger than Brunswick, I don't know. And they have, well, you can see all the targets here. I don't know how many targets this is, but like 20 or so. And they have 6 high priority targets, including Duck Creek, which is showing promise because they've hit bornite blobs, and thereafter Koval, North Parks types. Maybe, I mean, K-Day is such a behemoth that might be a bit unrealistic, and it's made up of several ore bodies. But these are multi-billion-dollar mines. They're hunting multi-billion-dollar targets. They have 20 of them. You can buy all of that for 12 million Canadian. So the question is, would you rather own, what did I say, 12? You can have 12, you can buy 12.25 Inflection Resources, which would be like, let's say they have 20 targets. 245 targets. 225 multi-billion-dollar targets. Early stage, very early stage. Or one Brunswick exploration. That's how I like to think when I can't be sure. It's like, yeah, because you think about, hey, Brunswick, I mean, it's a great case. It's an interesting case. I like, the idea of staking just a huge area, kind of having a monopoly almost in terms of lithium in that area of, I think they're in Quebec. Still, when I think about it, what would I rather own? Where do I get most bang for the buck? Where is the best risk reward? I would say, again, copper, silver and gold juniors are much cheaper than lithium juniors. And I don't think, maybe Brunswick isn't even expensive. Maybe this is cheap. But relatively speaking, I think these juniors are much cheaper. And it would rhyme with, I mean, again, lithium ETF is up here, lithium price is up here, and junior sentiment is down here in gold silver space. And I mean, it's maybe even worse in copper. Yeah, it's just, again, to me it's all relative. But I understand the frustration. You sit in your gold, silver and copper juniors, like, I mean, hey, they're dirt cheap. You have some good news. Nobody cares. Nobody cares. You have some poor news. You get slammed immediately. Whereas you have like Brunswick Exploration, just staking claims. And that went from 14 cents to $85 without taking any risk yet. Without taking any risk yet. Because staking ground is not really a risk. So imagine if you were a gold junior, it's like, imagine the sentiment was so hot that Inflection Resources could just stake land and it would immediately get 10 million per additional target or 5 million per additional target. You could just stake your way to money heaven. Who knows? I might like look totally stupid in 6 to 12 months or so. I mean, lithium might keep going up. Maybe Brunswick have a lot of success. Maybe lithium prices are high and Brunswick just makes multiple discoveries, and maybe 10 bags from here. I don't know. I don't know that. I just know I don't think it's as cheap as the gold, silver, and copper juniors. And this is not really normal. To have, I mean, what did it peak at? Yeah, it's like an 8-bagger, and they have not taken any quote risk yet. In the gold, silver, copper space, companies are out there putting money in the ground, taking risk. which becomes obvious because if they miss, they could be slammed by 35%, even if they started off cheap. It's a totally different environment between lithium and the other metals right now. This is what people dream about. That's what happened during the uranium mania, obviously. And again, that's what's happening now in the lithium mania. And happened during the silver mania, happened during 2011 mania in gold and silver. But these runs don't go on forever. And neither will lithium's. It will not keep going exponential like this. That you can take to the bank. And on a long timeline, lithium again is not even that rare, as I understand it. So again, I'm just speaking from risk-reward perspective here. I feel, I was tempted to take a position in the private placement for Brunswick Exploration, but it's like I don't know if I'm buying cheap or not. I really don't. I know that Brunswick Exploration is kind of a pure potential play right now, and I can buy stuff like Magna Mining for pretty much the exact same price, and they don't need to find anything more than they already have for it to be already cheap. Brunswick isn't even close to where Magna is. Maybe, I mean, from a de-risking standpoint, maybe 5-10 years behind Magna. And still you can buy them at the same price. So it's like, where do I think the best risk-reward is? Brunswick Exploration, which is, pure potential play. And that's the thing. It's like, yeah, that's pretty much what Inflection Resources is as well. Pure potential play. So I'm not going, if they find something, I mean, obviously it has, 10, 20, 30, 40, 50 bagger potential. Because they're after something that's, with multi-billion potential. So it's like, yeah, a 12 million Canadian. The upside is pretty obvious. Whereas in like Brunswick would need to hit at least find a Corvette type deposit to 10 bag. It's like, is that super likely? I don't know. Are they going to hit something? Sure. But it's like, just because they might find a deposit or two doesn't guarantee that it will be a Corvette type deposit. Yeah, and I mean, some other stuff is getting cheap again. SK, I bought that around 70 cents on the last after the last news release. This is also kind of a district scale, district potential play, but SK has already hit. They've hit the TV, they've hit the Jeff. We know there's Gold Siblulu, they hit the Scarlet, etc., etc. So they have discoveries already, and still it's cheaper than. It's still cheaper than Brunswick, for example. And we know how valuable the original SK Creek mine was. We know how valuable the current SK Creek remnant mine is. I mean, Eskina's project has an NPV of, I don't know, $1.3 billion or something. So, yeah, they're also chasing stuff that could be worth, billions of dollars. If they can find one or more deposits that can also really grow. And I think Snowline, for example, it's come down. I mean, they own a huge land package. Their value target might be around at least 10 million ounces at the end of the day. And they have, I don't know, 20 other targets or something. It's trading at 300. You could buy several snowline golds for 1 Patriot battery metals. Snowline has a market cap of 292, a bit kind of unchanged. So let's take 1,400 divided by 292. 4.8 snowline golds or 1 Patriot battery metals. So if we say value probably has 8 million ounces at least, 38 million ounces plus 4.8 times the 20 targets or whatever. Would you rather own 4.8 snowline gold or 1 Patriot battery metals? Which do you think is gonna net you the highest return in the long run? I would bet a lot of money that 4.8 snowline golds would in the end be more valuable than 1 Patriot battery metals. So again, yeah, I mean, you see stuff and somebody asked me, it's like, how do you sell? I mean, I've said this before. I'm very bad at selling. I sell something typically when I find something cheaper. The luxury problem right now is that everything is cheap. I mean, take Western Alaska. I have my roadmap. They own what appears to be an intact CRD district. And we know that, for example, Ivanhoe Electric have made a deal on the or own the Santa Eulalia project, which was a massive CRD district. And they own it for the porphyry potential at depth. Western Alaska, I mean, there should be a porphyry somewhere there. So it's like, okay, the Santa Eulalia CRD system was worth probably billions of dollars. And there might be $1 billion target after all is said and done with the CRD, because they're looking for a porphyry. And then you have Reina Silver, which is looking for the extension of the... Ivanhoe Electric is after the porphyry underneath the Tintic district, CRD district. And Reina Silver is looking for the extension of the Santa Eulalia district, CRD district. Western Alaska might have a completely intact unmined CRD district with all the different parts of a CRD district. CRD, maybe skarn, maybe a porphyry at the end of the day. So again, it's like in one of these districts there could be enough potential that it could be mined for decades, and decades later there will still be let's say $1 billion price left. Western Alaska has this whole thing. So when would you sell Western Alaska? I don't know. It's like, do you need to worry about selling for the next 5 years? Personally, I don't think so, unless they stop hitting anything very soon and they show that, hey, the superb hits we've had so far over like 400 meters or whatever, that's it. That was the whole shebang. If they just kind of double that, I think you have a mine already. And they're going to be testing a bunch of new targets and extending the water pump creek system. So again, when do you need to think about selling? Is Western Alaska overvalued in light of all the what they've proved so far and the absolute bonkers blue sky potential? No, I wouldn't say so. But if there came along another Western Alaska that was selling at 50% cheaper than Western Alaska, you would sell Western Alaska and buy that one. So that's, again, it's like I don't know when I, should sell something. I just sell something because I'm all in all the time when I find something cheaper. And I said this, I sold some snowline gold, not at the top, but it's like I sold some snowline gold because Magna Mining was so goddamn cheap. It was so de-risked. It's still probably the cheapest junior I know of. At least when you factor in how de-risked it is. But now, okay, Snowline has gone down a bit more, and everybody's, I mean, just read the forum, etc. Everybody's up in arms. Oh, how can it go down? It's like the corrections is why you can make money. It's like I added some Snowline, I think it was yesterday or 2 days. No, it was yesterday. Because I think, okay, now all of a sudden, not that I predicted it, but Snowline gold has gone down. Mr. Market has taken down Snowline. So now I think it's getting very cheap again. And obviously we're getting closer and closer to the next field season. And the same goes for like SK Mining. It's getting cheap again. And where's the... It's like... Western Alaska. Insider bought here. Insider own a huge amount of this company. And again, if you bought here, it's like, oh, you feel like a dumbass. Yeah, but you won't feel like a dumbass now or up here. As long as the story can grow, and it's not overvalued, you don't really need to be selling. And again, I just sell something that I think is, every stock I own I think is cheap. And I only sell something either if it has gone up on no news and I find something cheaper, for example. So the sales take care of themselves. If, for example, Snowline with no news really, it would trade down to here. I might take a absolutely enormous position again. If that doesn't happen, maybe I won't have an enormous position. So I don't try to predict. I just try to play the market. When the market makes big mistakes, I try to take advantage of it. I don't try to predict, because everybody bitches about some stock they own that goes down. Yeah, but okay. If they don't go down, how on earth can you make, such huge return? If the lithium space didn't crash here and here, there was no way for the people, the value investors, let's say, who looked farther ahead to be able to pick juniors up here, let's say, in lithium, and now they would be setting at, 2,000% return. It's just that people... Almost everyone misplay every low. They think lows or corrections are a curse. But you need those corrections in order to have, good returns in this sector, because it is so volatile. But that's not, people literally, they buy in here, and when they see it's not, quote, working, sooner or later they will sell out. They will sell out here. Because it wasn't working. They'll go into, pretend this was the gold space. They'll sell out here and go into lithium, the lithium sector here. And like I showed, I can't justify buying Patriot Battery Metals or, selling one share of Magna to buy Patriot Battery Metals. Because valuation wise, you get 8 Magnas for one Patriot Battery Metal share. And I highly doubt Patriot Battery Metals is 8 times as valuable as Magna Mining. So I can't justify selling a single share to buy that. But if I did own Patriot Battery Metals and I discovered Magna Mining, I would sell Patriot Battery Metals and buy Magna. So that is an example of how the selling takes care of itself. As soon as I find something cheaper, or I own something that just became cheaper, like, okay, I don't know, it's like Snowline goes down to $1.70 or SK goes down to, I don't know, like 50 cents or something like that. All of a sudden it's like, yeah, I'll find something else I own that hasn't gone down that much to sell to buy those ones. I had to sell a bunch of stocks in different companies to buy my Magna position. I didn't sell them because I thought they were expensive or overvalued. I sold them because I thought Magna was more undervalued. But all in all, it's like I don't know how many companies I own, like 30, 40 perhaps in total. I think every one of those are cheap, and they're just oscillating, between cheap and cheaper. But you obviously have to have some kind of game plan. It's like with Western Alaska. It's like, yeah, I think the current valuation is probably gonna look very cheap in a year from now. That's why it's a hodl position. I mean, the lower this goes, the cheaper it gets. Because this has probable growth as I see it. I mean, again, an intact CRD system. It's like you don't find those every day. And it's like unique stuff. And it's same with Snowline Gold. I mean, they might have one of the largest gold deposits in Canada. Just from their, valley target. That is kind of unique. Magna Mining is unique. Because they're the only real active junior in Sudbury. And they're the most advanced junior in, North America really when it comes to nickel and copper. That's unique. I mean, yes, I would love, imagine you have a direct stake in the most advanced nickel copper project in North America. And the best possible team to run it. And it's like Western Alaska, a unique proposition. They own the whole, CRD district there. Great management with huge skin in the game. And SK Mining, they own 85% of the SK Creek district. That is rare. Lithium is not rare. And I think they're relative to the other commodity spaces. I think they're overvalued on a relative basis. I would much rather own 4.8 times Snowline Gold, 4.8 valley targets than one Patriot Battery Metal Corvette deposit. This is just my opinion as a value investor. But that's what I talk about, value reshuffling. I don't try to predict anything. I try to hold the cheapest stocks I can possibly find. They're above average quality. And personally, it's like there's stocks out there that they might trade that, the same valuation. So at face value, it's like, yeah, Mr. Market says they are equally, they are worth as much. I don't think that's the case at all. I think there's a bunch of juniors like who are trading on par with, each other. Let's say 10 million market cap companies. But I think the opportunity can differ greatly. I mean, I think one might be 400% cheaper relative than the other, let's say. I mean, one 10 million market cap company might actually be kind of overvalued, while one is like 200-300% undervalued. I think this market is absolutely clueless, and I think that's the best way to go about it. Because if you're right, you might not need to be right more than 30% of the time. Because the worst case, like people say, the market is always right. In that case, I can't make a mistake really. I can't buy something because everything is fairly priced. But if I don't think it's fairly priced, if I believe that, hey, I think, for example, Snowline Gold is cheaper than Patriot Battery Metals, for example. Because I can get 4.8 Snowline Golds for one Patriot Battery Metals. If I'm right in that, and I bet accordingly, invest my money accordingly, meaning I would sell, one Patriot Battery Metals and buy 4.8 Snowline Golds. That's going to show up in the long term if that was if I make decisions like that and they tend to be somewhat correct. That's going to benefit me a lot in the long term. Because I'm betting, I'm disagreeing with the market. No, I think Snowline Gold is a better buy than Patriot Battery Metals. So I'll, act accordingly. And if I'm right on that, and the market isn't totally efficient and always right, I'm gonna keep outperforming the market. Yeah, so a long rant, Yeah, again, it's just pay attention to what is happening out there, because this is exact. The differences in sentiment is exactly why you can make money in this sector. Because sooner or later, commodity sectors tend to get really hot. And after that, or between that, they are really, really cold. Really cold, hot, cold, hot, really cold, hot. And I would say, my estimation of what I'm seeing out there in terms of sentiment, how lithium juniors act relative to others, I would say lithium juniors are probably up here. That doesn't mean they can't get more expensive, let's say, but I would rather be buying the ones that are, in my opinion, dirt cheap, and I don't pay a speculative premium, because you better believe that there's a speculative premium in, you're paying for a future that is not here yet. They haven't found anything that's worth 147 million. That doesn't mean they won't, but from a risk-reward perspective, I'd rather buy, let's say, Magna, which probably is worth 600 million right now and is selling for 188. There you don't even need any more exploration success to have unexpected 200% return, let's say. Yeah, again, my biased 2 cents. And again, I have no idea where any stock is going to trade tomorrow. Not in the next week either, not in the next month or anything like that. Same goes for metals. I don't know if lithium prices are going to go up again, even more up, or they're going to go down, or when they're going to go down. I don't know anything of that kind. I just look at what am I paying for a company, what do I think their assets are worth, and try to find cases where I get the most for my money at any given time. I steal the most amount of value. And my personal opinion is simply that I don't think you're stealing as much value in the lithium space as you can in the copper, gold, silver space. I mean, take Pacific Ridge. It's down to 24, has like 7 million in cash. It's kind of crazy, in my opinion. It's like I wouldn't say it's like they have nothing, but still, I'm just looking at some copper porphyries out there. Clayul doesn't have proven and probable, etc. But it's like, yeah, I think it's they have a decent shot of finding something that's akin to some of these deposits here. They have the grades to back that up, and it's still quite early stage. So yeah, again, I would rather own 6 Pacific Ridge than 1 Brunswick Exploration, for example. Anyway, consider me biased. I own shares of, I think, all companies mentioned. Many are banner sponsors. So again, I am biased, and I might just be let's say a bitter gold, silver, copper, nickel investor who's crapping on lithium. But I hope you still get my point. It's like, I hope it makes sense why it's like I can't justify selling any of these to chase lithium juniors. I simply don't think they are bargains on par with juniors in the other metals. That simply comes down to that. Nothing in terms of trying to predict anything that I know Peter Bettermills has topped or whatever. No, I just think it's a way easier time for like Magna Mining to double and triple than Patriot Battery Mills, for example. And I simply think I get more for my money in these other sectors. Thanks for listening. Don't invest money you cannot afford to lose. This is not investing advice, etc., etc. Bye.